Breakout strategies are some of the easiest strategies ever. They absolutely print money in a bullish market, but most of them are full of discretion and vague criteria. Here's how I would automate a breakout strategy. I'm Manir, also known as Ghost Trades on Twitter, and I also run Unbiased Trading, an agency where you can hire quant developers to help you backtest and automate your trading. Let's get straight into this. First, let's understand the core concept. So a breakout strategy aims to capitalize on price movements exceeding predetermined levels. Traditionally, these levels involve subjective support and resistance, or they use technical indicators like moving averages. But for today's example, we're going to be using something that can be fully quantified and coded. So for the entry, we're going to be longing positions that are initiated when the current day's close price surpasses the prior day's high. And when I'm saying the current days, that means just the current bar on whatever time frame we're using. So it could be a 2-minute bar, 30-minute bar, 1 hour bar, whatever bar we're actually using. And for the exit, we're going to be exiting that long position when the current day's close price falls below the prior day's low. And this can be applicable over multiple days, meaning this position could be held over multiple days. And until that condition is met, then it will not exit. Next, let's see how we would actually implement this into code. So this is an example for NinjaTrader 8. If you're unaware, NinjaTrader 8 is a platform that is primarily used for futures trading, but it also does have connectivity to Forex and stocks. My personal data provider for NinjaTrader 8 is Rhythmic and Kinetic, and that allows me to backtest using NinjaTrader and also automate my strategies using NinjaTrader. So you can see the logic overall is extremely simple. We're just seeing for a cross above when the close is above the previous day high, and then we're entering long, and then the exact opposite basically for the exiting long when we're closing below the previous day low. Now here are the results for all futures instruments on NinjaTrader 8 from 2019 to 2024. Now this does include slippage and commissions, and while this approach is incredibly simplistic, but most importantly systematic, you can actually see the results are pretty good, to be honest. For a incredibly simple logic with no filtering or anything like that, it's providing some really decent results on NQ, FDAX, ES, YM, while the drawdowns are very large, so that's something to definitely be aware of. That's probably due to us not having any risk management techniques really except the exit logic. While the exit logic is fine, we could probably introduce like a weekly max loss or something like that, which could help reduce that max drawdown. However, it is capitalizing really well on those trades that do break out and continue. Now, the advantages of this approach is by utilizing previous daily data for the current day's levels, it helps avoid parameter optimization issues. If we had randomly stated levels based on the amount of ticks from the current price or anything like that, we could over-optimize them a lot. Now, because they're already predetermined and pre-selected for us, just using the previous days and current days levels, it makes it a lot easier to not have to worry about overfitting the strategy. Next, it's super straightforward, so it's easy to understand and easy to implement both in backtesting and in actual automation. Lastly, levels come from real-time market trading data. Now, some of you I don't think understood this when I put it on Twitter. The reason why I mentioned this is quite important is some levels can be redrawn based on whatever indicators or methods they're using, which means they're not very reliable for backtesting over because they get redrawn when you're applying new data onto them. Whereas this is always going to remain true, and it's using real-time market trading data, which means when we take this live, there's going to be really no difference between the backtested model and the live model. Now, what about the disadvantages? This suffers a lot from false breakouts. So an additional confirmation indicator could really be beneficial. We could maybe ask for it to be above a certain moving average. We could look at the RSI, for example, anything like that could reduce the amount of signals we're getting to have them a bit more filtered with not getting a false breakout could be really beneficial. Next, the early exits are definitely prevalent. Because the exit condition is quite vague in general, is just looking for the previous day's low if it closes below, we could definitely add something like a trailing stop potentially. We could add something where we're looking to capitalize on at least 2 to 3 days of price movement, things like that. And there's actually another idea here where it's only using single entries. So instead, it could be adding sizes in batches across the continuation of trend. So let's say it breaks above And we're then going to be looking to add every time it touches like the 20 EMA, but doesn't break below the 50 EMA, for example. That could be something that could be an okay condition to add to keep on it pyramiding into size. Or you could say, if it breaks the previous day's high again, then it's adding more size, things like that. That could be a really easy adjustment and parameter that you can add that could maybe increase the results a lot. I'm not 100% sure. I haven't actually backtested it, but this is mainly just addressing the couple disadvantages to the current approach. Lastly, for automation, the strategy is built within NinjaTrader 8, which allows seamless automation from one code. The benefit of this is if you're working with places like Interactive Brokers, which is just in a brokerage, a lot of the time, if you do a backtest, you'll probably have to use different historical data from a different data provider. Let's say Polygon, for example, that's the data provider I use. And that doesn't allow you to seamlessly integrate that into Interactive Brokers. You'll need to create new code that handles all the execution and all that kind of logic on the Interactive Broker side of things. So luckily in NinjaTrader, you can just create one code that allows you to backtest it using their backtester and also release it as an automation on their charts and overall in their strategy category. So this is really beneficial. Now, there are definitely a couple downsides with NinjaTrader. Some of their logic for how they execute trades isn't perfect, and for whatever reason, some of their performance metrics really don't make sense. Their Monte Carlo is absolutely terrible in my opinion. So there are some things you'd want to export the trades out of NinjaTrader and do yourself. But for the most part, at least for the backtesting and the automation side of things, NinjaTrader 8 is great for that, and the main reason why I use it. Additionally, probably after this, I would want to run a Monte Carlo test. What a Monte Carlo is you're just doing a reshuffle or resample. So you're taking all the historical trades and you're reshuffling that trade sequence to see how that equity curve would look with a different trade sequencing, and then plotting that 1,000 times, for example. That would be really beneficial for this strategy to see just how much volatility there actually is. And as a disclaimer, this is a simple, basic example for educational purposes, and this probably isn't profitable in all market conditions. So please do your own further research and take these simply as ideas so that you can explore in your own trading. Thank you for watching, and if you'd like, please share it with anyone else who might be interested.